107 days. That's when some analysts predict the crypto bull run restarts. And it's all because of this chart. But I'm not sure I agree. So I did some investigating, and today I break it down. Do we reset in 107 days? Or is it all over? This video is for informational purposes only. Crypto assets are high risk and are not suitable for all retail investors. This video is not intended for a UK audience. Until 2025, every single post-halving year in Bitcoin's history closed bullish. In 2013, Bitcoin closed 13,000% up. 2017, over 1,900%. 2021, over 150%. But in 2025, Bitcoin closed down 6%. First time in history. So what happened? Well, some analysts say we're just delayed, that the real run starts in roughly 107 days around April 2026. So I went digging to figure out where this number came from, and honestly, some of the facts around this are mind-blowing. Did you know we have midterm elections in the US this year? And in the 12 months following the midterms, the S&P 500 has closed bullish 100% of the time. Bitcoin too, actually. And it's only existed for 4 election cycles, but same pattern. Now, past performance is not indicative of future results. I'm not saying buy because it will go up, but you can't tell me that is not a crazy pattern. It's not enough though, because for markets to go up, we need 3 things: liquidity, incentive, and willing buyers. Do we have those 3 things? Well, let's start with alts. In 2025, only Bitcoin had liquidity. Why? Because of the ETFs. But analysts point out that in 2026, alts might finally get their feet wet. How? January 15th, the Senate Banking Committee is scheduled to mark up the Clarity Act. This is the regulatory bill everyone has been waiting for. If this passes, it clarifies the rules for banks to hold crypto. Industry insiders are giving it a 50 to 60% chance of passing in 2026. Now, 50 to 60% isn't 100%. It's basically a coin flip. And even if it passes in January, implementation could drag into Q2. But why does this even matter? Think about it like this. From 2024 to 2025, Bitcoin rose from 38K to 108K, driven by institutional liquidity and ETFs. But there was a dam preventing liquidity from flowing into alts. The Clarity Act opens that dam. Fidelity could add Ethereum to 401ks. Pension funds could allocate to Solana. Banks could custody crypto for clients. And even if it passes by Q2, it won't magically make price go up. The dam might open, but you need people to drink. That is the willing buyers. And maybe they won't be thirsty for alts. Hold that thought, because Trump might create an altcoin thirst trap soon, but more on that later. For now, we can say that if the Clarity Act passes, we can take off potentially liquidity for alts. But alt liquidity, it's not enough. Bitcoin needs liquidity and stocks need liquidity. Like it or not, the stock market and the crypto market are intertwined now. So we need liquidity across the board. And that's where this chart comes in. Global M2 money supply just hit $116 trillion, the highest it has ever been. What is M2 money supply? Well, it basically measures the liquidity available in the world, how much banks are printing, amongst other things. Analysts like Raoul Pal point out that historically, when central banks print money, Bitcoin follows suit. But not immediately. There is a lag, usually 80 to 140 days, depending on who you ask. So money is being printed now. That's why M2 money supply has made a new all-time high. Also, the Fed officially ended quantitative tightening. That's them sucking money out of the system in December 2025. Liquidity started flowing in December. Now, do the math with me. December plus 107 days, January, February, March, April. April 2026. That's another place we find this 107-day number, and is also another tick for liquidity.